Yo, what's good, guys? Welcome to an edition of the Altcoin Bosses. It's been a while since I've done this video because we've been focusing so much on Bitcoin and what it's going to do next. Kind of neglected the altcoins, but I think now's a great time to actually have a look at what to expect with these certain altcoins moving forward. So the purpose of this video is to really help you to try and capitalize on altcoins that are due to retrace with the intention to continue back up if the move does have the momentum behind it to continue. So here's an example. Let's roll over to FTM. Phantom, you can see Phantom has formed a beautiful W formation, confirming the 800 EMA. Now, ladies and gentlemen, this is what I would love Bitcoin to do. I want to see Bitcoin form a pattern. I want to see the 50 crossing over the 200, and I want to see this nice smooth price action away from the range that they have been consolidating from. Now, in light of Phantom itself, you can see that we are coming up towards potentially the $3 zone. Now, if we can break above the $3 zone, then Phantom is likely to start coming up towards these previous pools of liquidity and further. But what is it that we need to see first? Because this move has happened and it's moved price away from the moving averages, we can establish that there's momentum right now in this coin. Okay, you can see that they've actually hit the range weekly high, but not the range daily high. The range weekly high is the range that is taken for the whole week, what direction Phantom can take for the whole week. And the fact that it's come up towards that zone and hit the highest point that it can within the week, okay, tells us that there is a lot of strength with this. But the strength in this coin is only going to be validated based on what it does right now, okay? So let's just go back to this. A pattern itself like this, it's a psychological pattern. It's designed to make traders step into the downside because the retail trader thinks that price is moving down. Market maker is building his longs at lower prices. Remember, he doesn't buy when price is rising. He sells when price is rising because that's what you do, isn't it? You sell when price is at its highest point. You don't buy, okay, as price is rising at its highest point. Don't understand why people are being told that when something is moving up, you buy it. No, you wait when it's moving down because you want to pay for it cheaper with the intention that it's going to continue higher. You don't buy as it's rising with the belief that it's going to continue. All you're doing there is just hitting and hoping. There's no strategy behind that, okay? But that is a debate for another time. The W formation forms, price comes to the downside. Market maker then reverses price back into the middle of the range. And the reason he does that is because he has already built his longs to the downside and retail traders are going short. So now he's hitting their liquidation points because that's where the money's at. The money is in the leverage trades. When he hits those previous pools of liquidity right here, he then takes that liquidity and realizes a return on his longs. At the same time, the retail trader sees this point as a resistance as well. So if we actually go to this part of the chart, you can see that market maker building his longs at lower prices. He reverses price back into the 50 EMA. Retail traders see that as resistance and they think, okay, I'm going to take advantage of price going back down again because we are in a downtrend. He solidifies that intention and gets retail traders to commit. And as you can see, the vector candles right here, here and here trap the retail trader to commit liquidity to the downside because they missed out on the move to the downside here or they got stopped out on the move back up. Now, the market maker is preparing price. Remember, he wants to go long. So if he's moving price down lower but not really dropping price, he's preparing to move higher, okay? Then what happens is price stabilizes in this range. Retail trader is committed to the downside. And then as he moves price away from this range, he's starting to take the liquidity from the retail traders again who went short. Okay. And then green vector candle, he pushes out of the zone. Another green vector shifts out of the zone and completely obliterates all the traders who were trying to run for shorts in this area. Now he's got those shorts liquidity committed. That means he can now use that liquidity to release his longs and realize a return. And as you can see, price has now moved all the way up to the upside. Now, what are we waiting for with Phantom? Quite simply, the retrace. Because after every time we see a W formation, we are always expecting a retrace because the market needs to bring things back into the fray. You can see that they've already moved away from the moving averages. We've got volatility and momentum in Phantom. So in order for us to believe that this is going to continue and that this move to the upside is not a false move, we are waiting for Phantom to come back down to test the 50 EMA. Now look at the confluences. We have got the 50 crossing over the 200 EMA. What we're looking for is Phantom to stay above the 50 and the 200. And if the momentum is still present, it will ride above the 5 and the 13 EMA. So Phantom can come down to the 13 EMA and bounce away from that point. Look at what happened here. You can see that it came down into the 13 EMA, the range right here, and then it shifted away from it. That's a strong sign. Okay, if we actually double tap here and we look at the volume, you can see that volume is rising as it's moving up. So there is support in this coin. Okay, and as you can see, whilst it's moving ground to the upside, the volume is still staying the same. There's not a reduction in volume, and the market maker is pushing price. You see these green vectors? The green vector candles are the market makers trying to mark up price. He's building shorts in this coin, but he's not ready to drop it. Okay, and if he does drop it, he's only going to drop to a certain level where he still wants to keep the retail traders' liquidity committed because he knows that he's got the support of volume in terms of retail traders stepping in, which means he can build his shorts at higher prices. Okay, now with this situation, we are waiting for Phantom to at least try and pull back. Now, how deep the pullback is going to be based on what they do at the 5 and the 13 and the 50 EMA. Ideally, what we're looking for is the 50 EMA to come up closer and closer to price, the 200 EMA to cross round like this, and the 50 EMA to cross over like so, and we want to see the 200 and the 50 expand. All right, as long as you are seeing the 50 and the 200 EMA expanding, you are implying that the volatility and the momentum is present. All right, now, although Phantom is moving up, you can see that we've got these previous zones right here. So they've come up towards this point and they've recovered the previous wicks in this zone and pulled away. So the $2.86. The next zone would be interesting if they can come up above this area here to the $3 mark, and then of course towards this zone right here. If they can release from this area of the $3.16, they will then be going for the liquidity up at $3.33, and they will make a run for it from that zone, because this whole zone right here has been added as a big accumulation. Look, if we drop onto the 4-hour time frame, you can see that, look at that, we've got this big drop, W formation at 200 EMA, shift out of the zone. Let me just get rid of that. You can see that, yeah? Drop, retrace, continuation to the upside. All right, if we mark up the pattern itself, you can see bright as day what we've got. Look, you have got a huge, you've got W formation right here, rise up level 1, rise up level 2, drop, rise level 3. So we're still expecting yet another move to the upside. But the validity of this move will be proven if it can break above this zone, because we may get an FTD zone. An FTD zone is fool the dealer. Okay, where the dealer wants to trap you into the belief that price is going to go and make another attempt towards the highs, okay, and then he traps the liquidity in this area and then he reverses price. In this formation, if they stick in line with the cyclical pattern to the upside, because you can see we've got level 1 right here, we've got a level 2 right here, and now we are expecting another move to the upside to break out and form the level 3 peak formation, which would give us an M pattern in this area. And then we start the process again. They come down, recover these previous pools of liquidity, and then base out and then try and make another move to the upside. Okay? So this is where we are at right now with Phantom. And if you look carefully across the board, you will see altcoins that are sort of doing the same behavior. Okay? Look at RSR. You can see RSR on the 4-hour chart looking like it wants to come away from the 50 EMA. So not that much activity here, but it will have a lot of work to do to get back up. But the liquidity is there for them to take. All right. Problem that we've got with RSR is it hasn't shown conviction to close above the 50 EMA on the 4-hour. But if we look at the 1-hour time frame, you can see that it's done a good job of going over the 50 EMA. So we are expecting the retrace. However, the 50 hasn't crossed over the 200, so it might not last. All right, so just keep an eye out on Phantom for the time being. KAVA's done a fantastic job of coming away from the range. Look at that. Brilliant play. Now, if we actually look on the higher time frames with KAVA, you can see it's come back up and recovered all of this liquidity right here. And we've got a lot of wicks in the chart. If you look here, you can see we've got the previous liquidity up here on the $5.50 zone. Now, the fact is this. You can see that we have got a sharp W formation right here, and they are quite notorious for marking price up in KAVA and sharply moving it back down again. So the retrace with this situation right here may bring price back down towards the 800 and hopefully bounce from that point. If it can't do that, then it's likely to start coming down towards the 50 EMA and bounce from that zone. But don't just trade off the bounce, because it has a habit of going below the 50 and coming still back up again. All right, so it's quite a volatile coin, this is. So just be mindful of that in that basis. Okay, we got Flux. Flux is still struggling in and around the 50. As you can see, doing the same thing as KAVA. Look at it. Forming a W formation right here. Happy days. Trying to come away from the range. All right. Look at KAVA. It's already done the same thing. So in essence, what you want to look for is coins that have done it and coins that are likely to try and do the same thing again. All right. So KAVA's actually moved away from the range. Flux is on its way to do so as well. All right. Looking at Luna. Perfect. Absolutely perfect formation. It's crossed over the 50 EMA, crossed over the 200 EMA, but I'm not seeing vector candles on the higher time frames. If I drop onto the 1 hour time frame, you can see what they've done right here. 50 EMA is yet to cross over the 200 EMA. That is important. Why? Because although the momentum is present in the coin itself, we need the 50 to cross over because it will solidify that there is momentum and they want to push price higher. Now that we've got this move above here and we've crossed over the 800, I'm waiting for the retrace continuation to solidify that this move is not a false move. There is liquidity for them to come back to. Look, they've come back up towards this previous red vector candle. We expect them to pull back whenever they hit a liquidity zone. Why? Because they've just released a ton of liquidity in this area. All right. So they're going to want to realize a return on that. And they're also going to want to build more positions off the back of that as well. So you can see Luna has got the liquidity in the chart for it to come back up. We're waiting for a retrace, continuation to the upside. So whenever we have the W formation, we are looking for the rise and we're waiting for the retrace, which will form the level 1 rise and then continuation to the upside. Okay. Now, I hope that's helped you out, guys, but it's just a little bit of a heads up when you're dealing with coins that have either broken out from a W formation and you may feel like you've missed out on the move. Always wait for the retrace after the W formation because it's the point in the chart where they regulate price action, bring things back into the fray to maintain the idea of momentum to continue higher to the upside. All right. Be sure to subscribe, ladies and gentlemen, because we are going to be going live again today at 2 p.m. to welcome in the New York session. And then, of course, later on tonight at 10 p.m. to finalize what has happened in New York. Mad love and respect to every single one of you beautiful people. Have yourselves a wonderful day. Take care of yourselves. Peace.